What's your long-term 10 to 15 year expectation?
10-year will be 100x, and 15 will probably be 1,000.
1,000? How? But from a market, that's impossible. From a market cap, 1,000
Yep.
in today's purchasing power, like today's dollar
Yes.
purchasing power.
Yeah. Yeah. And I know exactly where your head's going to, which is, hang on a second, that represents $2,000 trillion, and there's only $1,000 trillion of value in the world.
Yeah, that's exactly where my
Yeah.
head's at.
Yep. So let me give you an example. Let me give you an example of what this is. So, or an example of the impossible. So if you look at in the 1850s, or just let me break down where we are today in oil production terms. In oil production terms today, we produce roughly 100 million barrels of oil at a clip of, two months ago it was $80 a barrel. Now it's $60 a barrel, so it's $6 billion a day. In the 1850s, they only produced 30,000 barrels of oil in the entire year. Now we do 100 million barrels a day. And so if I said to you, oh, we're going to have 100 million barrels of oil produced in a day in the 1850s, they would have said it's impossible, that you can't do it. There's not enough, there's not enough land mass on Earth to produce that. But as technology got better, they could go deeper, they could, build more efficient pumps, more efficient drills, and all of a sudden now we rely on oil for everything. I look at this and think a lot of people are misunderstanding that Bitcoin is a need, not a want. And other than air, water, food, shelter, Bitcoin is the next most important thing that a human can have. And there are maybe 1 million people in the world who feel like that right now. But over the next 15 years, 8 billion people on Earth are going to figure that out. And so what can happen is, and this is where, if you have a look at how market caps are calculated, you look at the most recent price and you multiply that by the number of units available in that market. And in short, the market cap is downstream of the current price, and price is determined at the margin. My expectation is, because we're sitting on basically a fractionalized banking system that is effectively built on debt, we need to recapitalize our society so that we're sitting on more equity than debt. Now, the only way to do that with no downstream consequences for society is to put all of that capital into Bitcoin. And what happens here, and this is the only asset that can really get an increasing return on scale rather than a diminishing return of scale, is that $1 into Bitcoin produces a 2 to 10 to 100x return as far as total equity goes for the Bitcoin market cap. If you put $1 into property or $1 into shares, you might get a 10% or a 15% return if you're lucky. So you're getting a 10x return by putting equity or capital into Bitcoin. And so what I look at, and this is, say diagrammatically, what we're looking at is the current system that we're working in is basically a tiny little bit of equity with a huge triangle of debt sitting above it, which is very, very unstable. My expectation is that Bitcoin is not only the only asset that can fill that void to stabilize it, but it's the best asset from a society perspective, because there's no impact on cost of living pressures, inflation, and housing. The fact that you can't live in a Bitcoin is the very reason why they're going to choose this asset to recapitalize the world. And so in TradFi, we're working on a under-collateralized system. Basically, you've got that upside down triangle. In Bitcoin, you've got an over-collateralized system. So you've got to have more equity than there is debt in the system by very definition of it. We're going to move to a more stable system. And you say, oh, well, Peter, there's still $2,000 trillion of equity in Bitcoin versus $1,000 trillion in everything else. How does that work? And it's going to work for two reasons. Firstly, people are going to value the future purchasing power of their Bitcoin more than they value their current purchasing power. So you look at Jeff Bezos as a perfect example, or Elon Musk. Elon Musk, the richest bloke in the world, doesn't even have a home. He prefers his future valuing purchase power than his current. And this is where everyone, I believe, is going to figure out, well, if we're improving society and getting better through time, it's going to be beneficial for me to save my Bitcoin and buy at a later point in time. And there's going to be more people who do that than don't do it. And this is how you can store more value in Bitcoin than any other asset.
Yeah, I mean, it's now that you're breaking it down, it's incredibly obvious. Like, for example, and I'm going to give my own personal example, right? So I live in Miami. It's pretty like up there in terms of cost of living, in just general cities worldwide. I'm happy renting, like super happy renting. Like, it just makes like, why, the way that I see it on a Bitcoin standard is essentially like it's benefiting me. And even let's say I bought the property and I rented out the property, it wouldn't give me that type of return, right?
Mm-hmm.
So like, how do I essentially spend as little Bitcoin as possible today, while maintaining a certain type of lifestyle? Obviously, it's not real estate, right? Because before,
No.
I think what fiat has done is essentially created, which is absurd, right? Real estate, this like investment vehicle. But if you compare it to Bitcoin, you have to pay maintenance, you have to pay property tax, you have to deal with tenants. And if you compare that with Bitcoin, it's like, okay, no tenants, no property tax yet. No maintenance. I mean, to an extent, so you can make an argument there, but significantly less maintenance than real estate. And what you're making the argument for, and I'm connecting the dots in real time, is more and more people are going to start to see what I've seen, essentially, which is just like, this makes no sense. It's like, no, a home isn't an investment. It should have never been an investment. The fiat system made it essentially force people to become part-time investors just to maintain their purchasing power. Bitcoin fixes this. So you're making the argument that more and more people are going to come to the realization that I've come to, that I think a lot of other Bitcoiners have come to. I saw Stefan Livera making the same case about renting, right? So like, it's just like, and then you're pressured by your parents or your family, is like, buy whatever. It's like, yeah, I could, but I would have less Bitcoin and I could just rent, live the same lifestyle and have more Bitcoin. Why would I do that? Right? But to anyone who's not a Bitcoiner, you're a crazy person. You're insane. Right? And you're
Correct.
basically making cases like, no, people are going to realize this, and it's going to dramatically change the world. So could you elaborate? Could you keep going? Because you were on fire before I interrupted you because I was connecting the dots.
So I'm living your life too. I rent and I love it. We just sold our family home. Personally, I feel a sense of liberation. Yeah,
exactly.
Liberation that I
Exactly
don't
my
have
point.
to deal with a property if something goes wrong with it. We've got wonderful landlords and real estate agents who look after us and make sure it's kept. But to the point about how you can cram more equity or capital into Bitcoin versus any other asset, the other assets that we talk of are limited in scope by the amount of earnings that can afford to pay the debt on that. Whereas Bitcoin has no debt on it. So it can afford to consume all excess capital in the world. And this is where we're going to see a shift of any excess capital to yourself personally and every other Bitcoin out there who's doing it. More and more people are going to make that lifestyle decision to basically rent an asset that they can live in and effectively own, but they're just renting it, to leave more capital in Bitcoin for the preservation of the Bitcoin for longer term. And this is where, to highlight a point, Jeff Bezos, worth hundreds of billions of dollars, he doesn't go out and spend hundreds of billions of dollars a year. He's very lucky if he spends maybe less than, I would have thought, 0.01% of his entire net worth. And that's because he's got a great asset in Amazon that continues to accrue value. And my point is that when 8 billion people have access to an asset that's better than Amazon, they're not going to sell it for a whim or for something that they just offhandedly want. And this is where all of a sudden, when you live on a Bitcoin standard, you get very, very focused and disciplined when it comes to spending. You have to make sure you really want that item, because the future purchasing power of Bitcoin in my head is so great that I don't want to be seen as wasteful with my Bitcoin. So this is where, once you understand that there's going to be a demonetization of the real estate sector, there's going to be a demonetization of the stock market, where we're going to see a compression of those price earnings ratios come down dramatically. They're at ludicrous levels at the moment, well above, I think it's 18, nearly 20 times PE ratios, which is just, at all-time highs. It's approaching, the internet bubble back in 1999. And so there's going to be a compression of the PE ratios, a compression of the yields in property. The values might actually not change so much, but that's going to put upward pressure on the price of Bitcoin. And so we're going to get less and less Bitcoin trading on a daily basis, and the market cap of Bitcoin is going to go through the roof. And price is determined at the margin. So we might only have, and this is, the end conclusion I get to is, we're going to have whatever's minted on the day. At the moment, it's roughly 450 coins. And whatever the global trade is on the day is going to have to be facilitated by whatever's minted on the day, because everyone else has locked their coins up, stored it, and is not spending them. And if that were the case, we'd have, if that sum was done today and that's how we were living, then Bitcoin would be $14 billion a coin. And I say that with a straight face, thinking, well, that seems fair.
Need liquidity without having to sell your Bitcoin? For more than 6 years now, Ledn has been the trusted choice for Bitcoin-backed lending, with transparency, security, and trust at their core. I absolutely love these guys, and I personally not only have an account with them, but also a loan. And some of the key features that I love about Ledn is the fact that there are no monthly payments. You pay at the end of the term. You also have the ability to roll over the loan as well, and you can pay it back whenever you want. Essentially, what they do is that they help their clients unlock the liquidity of their BTC, allowing you to HODL while still accessing the wealth of your Bitcoin. They've been battle tested with their focus on transparency, security, and trust, allowing them to build a proven track record of client success and security, helping tens of thousands of clients harness the value of their digital assets with confidence and peace of mind. Learn more about what your BTC can do for you today. Simply Bitcoin viewers get 0.25% off their first loan by using the link in the video/podcast description. What are you waiting for? Head over to ledn.io today.